OnTheMarket.com is a disruptor in the business of house listings on the net, a sector which is dominated by Rightmove. The team at OnTheMarket is convinced that their business model is going to bring about a change in the way the sector operates. Chief Executive is Ian Springett. He founded PrimeLocation.com back in 2000, and having left the business in 2008, he's come back to the sector with his eyes wide open to the possibilities. Ian, good to talk to you. Thanks for dropping by.
It's a pleasure.
First of all, explain your business model.
Yes, well, in brief, back in 2014, as you say, the market was characterised by a dominant market leader in the shape of Rightmove and another very strong business alongside it, Zoopla Property Group, operating effectively as a duopoly and charging increasingly high fees to thousands of independent agents across the country. It's a very fragmented market. And one of the interesting things about this business is that portals are effectively reliant not just for their revenues, but also for the essential content that draws consumer visitors to them on the estate agents that work with them. And what we have seen over time is a separation of where the value in these businesses is created and where the ownership lies, which is now outside the industry. Rightmove is an institutionally owned public company, and Zoopla is in the hands of private equity, just recently transacted. So our model is to really bring about a realignment to some degree, where we put ownership of the portal into the hands of thousands of agents that use it, but also pitch our pricing at a level which undercuts the kind of 75% profit margin making that Rightmove has established over the last few years, to provide the agents also with a sustainably fair price for their core listing service, whilst at the same time generating good returns for investors.
You came to the market, I believe, in February this year, didn't you?
That's
with a £30
correct.
million listing, was that right?
Yes, it was. Well, £30 million raise.
Sorry, beg your pardon.
And we're using that money over the next couple of years to grow the organisation, increase radically the number of estate agents and other advertisers using the portal, and also to increase the number of consumers through investment in marketing who are using it. And that combination together generates more return on advertising spend for the agents, and therefore produces revenue growth for us in due course.
How's the business been growing since IPO?
Well, we focus mainly on the operational KPIs. There's no expectation that revenues will grow, certainly for this year, because we have built the business by taking away the barriers to agents joining, and the majority, in fact, have joined on free trials that will run off in the following year. But what we have seen is the number of agents that we have on the portal double. It was 5,500 at IPO. It's now over 11,000. We've trebled the number of consumer visitors to the portal, but very importantly, we've quadrupled the number of leads that we are generating for agents. What that means in practice is, on average, branches that are using OnTheMarket are getting double the number of leads they were in February, and each visit is producing over a third more engagement than it was at that time. So this is a classic network effect building for this kind of business. More people looking at more properties, combining to produce even more value for the advertiser.
What are your projections on from here? I mean, that's quite a steep appreciation of business and,
Yes.
and eyeballs on the net and so forth, and returns to the agents. Do you see that sort of speed at which you've collected that sort of business over the last 6, 8, 10, 12 months or so increasing? Because, as you said, you've got an interesting point next year when the renewal of the contracts comes up. And perhaps maybe you want to then start weaning people off the free access to become a paying contributor.
That is exactly right. And so we see continued growth in agents using the portal. So we're currently at about 63% of where Rightmove currently is. It has 17,500 agent branches using it. We certainly see momentum in traffic and leads, and we have a very clear view of where we need to get to in terms of leads value generated for estate agents by the time we come to convert them to paying contracts. And we're tracking that number. So that's, at the moment, the most important feeling that we need to be having, that we will, at the right point in time, reach that level of value generation for the agents. Now, from an agent perspective, support for On the Market will not just be a question of the simple equation of how many leads versus how much am I going to pay. There is also the ownership structure to consider, whereby our pledge is that we will provide this sustainably fair pricing, but also we have more shares that we can issue in order to engage those agents as part of the broadening ownership group. And the ambition is to move from what we had at IPO to a grouping of 10,000 agent branches, which are in the ownership of firms who are shareholders. So that's more than half the market. We will add more agents of the type we already have, and that is local, regional and national market leaders, to create this very strong core for the portal.
Of course, all this is costing money at the moment. You're presumably some way away from making profits and so forth.
Indeed.
But talk a little bit about cash burn. You had this 30 million brought onto the balance sheet at IPO.
Yes.
How much of that is left, and what are you going to do about funding the next stage, if you like?
Yes. Well, the first thing to say is that we have strong and stable revenues from our existing agent shareholders, the 5,500 agents who are with us at IPO. So the capital that we've raised is on top of that. And you're right, we're investing very heavily over the current period. As at the 31st of July, which is our half-year end, we had 24 million still in the bank. And I think the important message is that we have achieved everything we have achieved with a lower cash burn than we'd expected. And in particular, we had thought that we would have to prime the marketing pump much more rapidly than has been the case in order to stimulate the interest and support from agents. So that's meant that we've retained more to utilise as we go into the all-important conversion period. But in terms of break even, the brokers that cover us are indicating that we should come into cash positive territory towards the end of next year. And then it is the following financial year for us, which would be the year to 2021, when the business turns materially positive as more and more of the agents are converted.
What do you see as the next milestones? Clearly the conversion is a really big milestone,
Yes.
and it'll be interesting to see what pops out the other side. What do you see as the key milestones to watch out for?
So I think continued growth in agent numbers. We will also make announcements from time to time, I'm sure, about the other KPI progress that we're making. I think that investors could keep an eye out for us in issuing more shares, because that is a kind of lead indicator of the kind of deals we're doing. I think also that in addition to the listing fee revenue, which is the key driver of all of this, there are also other product opportunities that we will be introducing during the early part of next year. And that is all grist to the mill in terms of building revenues that will, in the short term, slow down the cash burn or contribute more to the pot that we have to build the business with. And obviously in the longer term, it's one of the key growth areas for us.
Well, look, good luck, and do come back and
Thank you,
talk a little bit about how things are going, especially in that conversion period. That was Ian Springett. He's founder of OnTheMarket.com, and he's chief executive of the company.